This video is going to discuss the importance of thinking for yourself when it comes to trading. Hello, I'm Peter Martin with Trading 212. I'm going to start with a quick story about a couple of friends of mine who were traders a few years back who had an acquaintance who himself had a reputation as being a very capable equities trader. And they got into talking one day and he happened to mention that he was long a certain company, let's say this is company X, and they went away and thought to themselves, well, why don't we go and buy some of this company ourselves just because we know he's such a good equities trader. And the next time they spoke to him, they asked if he was still long and he said, yeah, I'm still long. And time went by and the trade started to go quite badly for them, and the next time they saw him, they asked him if he was still long and he said, yeah, I'm still long the stock. And they were getting a little bit anxious because it was going so badly wrong, and they saw him a couple more times. Eventually he said, look boys, why don't I just let you know when I'm no longer in this position. So he gave them a ring finally and said, I'm out. And so they closed out their position, and they said to him, well, that hasn't gone too well, that one, has it? And he said, well, I wanted to be out a long time ago, but I was held into it for regulatory reasons at my company. If I take a position, I have to hold on to it for at least 90 days before I can close out. Otherwise, I'd have been out a long time before. So they ended up taking a loss. And why? What's really the moral of the story? Well, because they were in a trade where it wasn't really their trade. They didn't know why they were in it, and they didn't therefore know the reasons for being in or being out. They didn't know when to time getting out for themselves. And this kind of thinking can apply elsewhere. If you've ever followed a tip from someone about whether to trade a certain market, what do you do if they disappear on holiday or if you can't get hold of them? It's a dangerous thing to sort of not know why you're in a trade. So really the moral of the story is that you do need to think for yourself, and it holds true for trading in general. Over the years I've been lucky enough to observe quite a few successful traders, and the commonality between them is that they're very single-minded people. If you look at the ways that they traded, often they weren't operating from the same playbook. There may have been crossovers in the fundamental building blocks that they were using to trade, but really they'd all found their own idiosyncratic way to mine their own seam, to make their own way trading the markets, and they may not have been trading at the same time because they may have been looking for different market conditions. Now in these videos, these educational videos we often look at indicators, and I often say, this is something that someone generally in the market, it's a well-known tool. The person who invented this indicator recommended using these settings, but there has to come a point when you're trading where you go away and work out why this thing works, and really do some thinking for yourself and work out what settings are actually going to work better for you now, because some of these tools may have been invented decades ago, and the original settings that may have worked then may no longer apply to current market conditions. So you need to go away and work out how to tweak or finesse the settings to suit what you're trying to achieve, and to work out whether it suits the markets that you're trying to trade. And so what does that mean? It means, well, you're going to have to do some heavy lifting. Get out into a demo account, try it out, trial and error, see what works for you, see if it is something that applies to the market that you want to trade. And also it may be the case that you need to work out whether, or think for yourself about whether it suits certain conditions. The conditions of the market can change. We can be trending in a certain direction at times. We can be stuck moving sideways at others. We can be in volatile markets. We can be in quiet, stable markets. And certain tools will be better suited to different conditions. So you do have to apply some thinking. You can't just apply indicators as a blunt tool that works in all conditions. So really just a quick talk about the importance of thinking for yourself, and just something to bear in mind when we get on to future videos and look at other indicators, you can't just stick with the default settings or settings that are recommended by someone else. You have to work out what works for you. I hope you enjoyed that quick discussion of thinking for yourself when it comes to trading. If you did, please hit the thumbs up button and give us a like, or if you want to send us some feedback or suggest a topic for us to discuss in the future, why not send us a message in the comments section. We do go through and read every single one that comes in there. Now, as well as these educational videos, we do cover other topics. We look at analysing popular markets like gold and euro dollar and oil. And we do look ahead videos looking at the trading week ahead early on in the week. The best way to access that content is to subscribe to our YouTube channel by clicking on the subscribe button. And we do have new videos coming out on a regular basis. If you hit the alarm bell icon, then you'll get a notification the next time we upload a new video to YouTube. But that's all for now from me, Peter Martin, and Trading 212. Good luck with your trading, and I'll see you next time.